Yeah, it's kind of amazing. I mean, the Keynesians have brainwashed all of us, and the guys in the Fed, they paid a lot of money to have academics say that we absolutely need the Fed. But if you really think about it objectively, all prices should be set in the free market. I mean, the price of any goods or service is a balance of supply and demand, and money, the borrowing money, the price is the interest rate, and that should be set by the supply of savings balanced against the demand for investment. So the market should set that rate. But of course, these apparatchiks who call themselves Fed governors, they've set that rate, and that's a very powerful position they put themselves in. They make a lot of money for doing it, and they can really shower benefits upon their friends and then get paid a lot of money once they come out of office. We just saw Janet Yellen just went to work for PIMCO after she got $7 million in speaking fees. So, what they've done is they've created a system that benefits them, not the rest of us. And, whether they've done it evilly or intentionally or not, it really doesn't matter. I mean, here's my point. Even if they were omniscient, even if they were godlike, they couldn't find the right interest rate because, central planning of a price just doesn't work. The Soviets proved that with, the grain shortages they had when they tried to set the price of grain. So, it's a system that it's funny that we've relied on it. We've relied on it out of history. At one time it was much more constrained. I mean, it wasn't until really 2008 and Bernanke just brought in a whole new level of kind of absurd behavior. And, the notion of taking interest rates to zero, or, and that obviously benefits people who can borrow and cantillionaires, or the other extreme, Volcker took them to 20%, which almost bankrupted my father. So, it's like we've got these guys setting these monetary policies, and they don't suffer from the outcome of those policies, but the rest of us do. They take rates to 20, and a lot of people get hurt. They take them down to zero, and a lot of the wrong people benefit, and the rest of us suffer from inflation. So, yeah, it just doesn't make any sense to have 12 people setting the price of money. The market should set the price of money. And again, I wrote the book, Jeremy, because I felt like, I watched political debates. I just felt like nobody was really talking about the core reason. And I needed to explain it in terms that an average person would understand. I didn't want to get all in the weeds of Fed and monetary policy. In fact, I showed it to some people who didn't know anything about this. And first one read it and said, "What's the Fed?" I said, "All right, I need a footnote that explains the Federal Reserve. I need a paragraph that tells what the Fed does because, the Federal Reserve has really made our lives much more difficult than they need to be. It's caused a lot of pain. And so, if we address that and we go to a sound money standard, we won't need a Federal Reserve." So, I mean, truly, Friedman was right. Inflation is always a monetary phenomenon. And they've been growing, if you look at long-term averages, they've been growing M2 at 7 or 8% a year. So I think that's kind of the long-term average, but it goes up and down around that. And, that's just one way of looking at it. But I mean, they say they're getting back to 2%, but the reason they're going to have a hard time getting there is that this 40% burst in the money supply, created a lot of dissatisfied workers. Let me just give you an example. In the United States last fall, the U.S. longshoremen went on strike. These are the people who load and unload ships. And they went out and they got a deal. They got a 6-year, 60% increase in pay. So their pay is going to go up 10% a year for the next 6 years, guaranteed. Okay, that's a long way from 2%. Okay, and so the whole notion that the Fed has inflation under control, I don't think they do, because labor got very badly hurt with the last bout of inflation, and they're going to push very hard to get their fair share back, and that's happening everywhere. So. The 70s showed us that once inflation starts, it's very, very hard to get it back in control. I mean, Volcker did because he took rates to 20%, but in turn, he nearly croaked the economy, nearly bankrupted my father, and, created a lot of pain in that process. And he was able to do that because at the time, the debt to GDP was 30%, not 125%. And if we took rates up to 10, 15, 20%, the entire world would go bankrupt. And nobody wants that. So, look, the whole thing's a terrible mess, but there's a beauty, and I don't like focusing on the mess because it's depressing. But on the other side of this, it gets a lot better, and that's what I'm excited about. In fact, I just did a pod earlier today with a guy who lived through the hyperinflation in Argentina in 1990 and 91. He said, it's horrible. I mean, my mother would go out and buy food the minute she got paid because she knew it'd be more expensive. And she said, and then the currency failed totally. And we backed the currency with, a sound measure. In that case, they did the dollar, and the dollar was sound in 1990. And he said it was amazing. Within a year, everything got so much better. There was no inflation. Everyone was working. It all kind of worked. And And that's the bright side of this problem we're suffering through here. If we can do a monetary reset to a sound money standard, whether it be gold or Bitcoin or some combination, the world will get a lot better. And so that's another reason I wrote the book. It's like, okay, look, folks, this is the problem. The solution is we got to go back to sound money. Start thinking about that when the next time you go to the voting booth. I mean, we're going to eventually, inflation will continue to be a problem. We're going to have politicians who are going to say, hey, this inflation is a real problem, and we need to return to sound money. Those are the people we need to support, right? If you look at the math behind those things, what you see is that it's just unsustainable. And in spite of the good efforts of Doge, the government efficiency effort by Elon and Trump to cut expenses, it's going to be extremely hard to do because 80% of the expenses are in areas that are kind of considered untouchable. Basically, Social Security, Medicare, Medicaid, defense, and interest. And so, and if you cut the balance of the 20%, even if you took that to zero, the budget still wouldn't balance. So you've really kind of got a situation where the government just has to keep printing money and at an accelerated rate. I mean, one of the quotes in the book is that the problem with inflation is that it's like getting a drug high or a liquor high, and to get the next one, you got to take more. So it's cumulative, and it appears to be coming to a head. And a couple of signals that it's coming to a head that you and I can both see, and it's very obvious to most people. I mean, gold is just relentlessly pushing to record highs every day, week, and month. Here we are at 3,100. Last March we were at 2070. So that's a 50% move in a year, which is a really large move for gold. It has very rarely done that. And then, of course, Bitcoin also hit a record high of 106.7. It's backed off to 85. But the point is that these are canaries in a coal mine saying, hey, monetary debasement's a problem. We'd prefer to hold gold versus bonds. I believe Bitcoin will be a part of it. I believe gold could be a part of it. They're both forms of sound money. One's analog, one's digital. What it's going to look like, it'll be different. There won't be as much debt. I think the politics will get less corrupted. I think we'll have fewer wars. I mean, one of the things this fiat currency has done, the book lays this out clearly, is it's enabled governments to spend on wars. Wars are extremely expensive, and nobody really wants to pay for them, and most people really don't want to engage in them. I mean, I don't know a lot of people want to run around the world and kill other people. I mean, if you do, you're a psychopath. So, if you had sound money, a government couldn't conduct a war by printing money to pay for it. And so, arguably, you could think that, it's possible to think that maybe there won't be as many wars on a go-forward basis with sound money because the printer's not around. I mean, that's certainly what many people have said, and I kind of agree with it. Yeah, you see it and I see it. I mean, we know there's been a lot of physical move from London to the U.S. I'm not sure what that's all about. Recently, just this morning, there was announced a huge purchase of futures that look like they intend to take delivery on them. I mean, there appears to be a little bit of a scramble for gold. I mean, it appears like we're entering a gold bull market, and it's quote unquote on. Now, that doesn't mean we won't have drawbacks. Of course, we will. But I think that what gold is very good at doing is sniffing out future monetary debasement. I mean, it did it in 2018. It started moving before COVID, and then COVID came along and it really moved. And so. I think what gold knows is that the monetary system is broken and that governments will sooner or later be forced into printing money, and it's just front-running that move. I think these big buys, by the way, they could be governmentally driven, but I actually tend to think that if you look at it, Jeremy, there's about $950 billion in quote-unquote wealth worldwide if you add real estate in there. So call 450 of that, bonds, stocks, cash, art, all that kind of stuff. The other 450 is real estate. A lot of that wealth, I think, is kind of thinking, they're printing a lot of money. There seems to be inflation that might continue. Monetary debasement's a serious risk. Maybe I should own some gold. And the gold market, by comparison, is tiny. The total market cap is about 20 trillion, but really only about 10 of that's available because the other 10 is either in a central bank or on a lady's neck, or in a museum. So it's actually less than 10. It's more like 6 or 7 is available for purchase. So 950 trillion in assets, a sound money market for gold of 6 or 7 trillion. Well, if only 5% of the 900 says, "Gosh, I want to protect myself," that's 45 trillion dollars, and that's chasing a $7 trillion market. So what's that going to do? That's going to push that gold price up.